It's the third day of Christmas and I'm guessing the hangovers are really taking their toll now. We've got the perfect cure. Let's raid this stocking again for the third tip of Christmas. There's 20 odd tips in here. We're going to pull one out for you today. On the third day of Christmas, We Make Mint said to me, we've got a tip, we've got a tip. Okay, so tip number 20, gambling versus trading. This is such an important point, and if there's anything you take away from these videos, it's this video right now, because you're going to learn a lot here. This is a very good point. Some people say most traders lose money. We disagree with that. Most people that attempt trading lose money, and there's a reason for that. They are gambling, not trading, but the kick of it is they don't realise they're gambling. What do we mean by this? Right. Our definition of a trader would be someone who sits down and looks at charts the night before. They work out their entry, they work out their stop loss, they work out where they want to take profit. And they've got a reason for all three of them positions, right? A gambler maybe do something like that, but a lot of the time what they do is they watch short-term charts, like 30-minute chart, the hour chart. And what they'll do is they will look for opportunities or positions throughout the day. So they may be watching crude oil. Oil might come down and go up a little bit, and we're like, oh, I knew that crude oil was going to go down. I'm going to sell crude oil, I'm going to make money as the price goes down. The problem is, you are putting on a bet. You're thinking, I thought crude was going down, it's gone down, it's gone up a little bit, I'm going to put on a bet that it's going down. And that is exactly what you're doing. If you are trading like that, you are betting. And what happens when you gamble? The house always wins. Because the problem is, say it goes up a little bit and you sell it. You lose money as the price goes up, you make money as the price goes down. If it does go up and hits your stop loss, why did you put your stop loss to where it was? Chances are you put your stop loss on a whim. You was looking at the chart, oh, I want to sell crude. The problem is you haven't worked anything out. If the market goes against you, you have no contingency plan. You are making a bet that crude's going down. That is not how you trade. That is not trading, it's speculating, it's gambling. The way that the only time we ever open a position on the stock market is we've worked it out the night before, we've worked out our entry, our profit objective, our stop loss. That is it. That is how we trade. If we do not have a plan like that we worked out when the market was closed, we do not open a position. And some of you guys, what you should do is, if you are doing something like that where you're thinking something's going up, it's going up and you buy it, realise that you are gambling. You are putting on a bet. The next time you take out a trade, say to yourself, am I gambling? Is this what I think, so I'm putting a bet on it? Or is this something that I've worked out and I've actually sticking to a trading plan? Because a lot of you are gambling and you don't realise it. So do not ever gamble in the stock market. It's human nature to take risks and to, this is why there's a William Hill or a Coral on every corner of your high street, because it's in our nature to take risks for profit and things like that. Good traders, they still have them instincts, but they suppress them. They are disciplined. They're like, no, I'm not going to open a position unless I've got a plan. So next time, am I gambling or am I trading? If the answer is gambling, don't open a position.